Hey folks, we're just recording this week's look ahead on Tuesday. Just a quiet day yesterday, but we don't have a quiet week ahead. Very much one of the busier weeks, I think, of the year. So, obviously, yesterday pretty quiet, but U.S. Services PMI coming out there 52.4 a miss. If I just get the filters back on here, you will see that let's see, the manufacturing PMIs actually here. You can see PMIs came out at a beat. And what we were looking for yesterday was actually sort of, I was looking for a strong beat across both, which actually would have been a little bit bearish for markets to kind of stand off of the highs, feeding into, why? Because if it was a beat, it would feed into a more hawkish Fed. And we saw a little bit of that on the data yesterday, but nonetheless, the market's staying buoyant. So if we kind of, I don't really want to have like tier two news only on this list. I want to have tier one. So if we go back here today, Tuesday, we've got, at three bells, we've got consumer confidence out of the US. But essentially the big stuff to come here is tomorrow, Wednesday, the FOMC interest rate decision. Are they going to pause? Are they going to hike 25? I don't think there's a hike coming here. I think there's a pause. But, it's not going to pay dividends sitting here trying to crystal ball what's going to happen. Obviously, having a plan of what and how to trade. If it is a miss, or sorry, if it is a pause, or versus if it is a hike of 25 basis points. So we're going to be live in the Discord tomorrow night at 7 bells, actually from 6:45 p.m. onwards GMT. Now, as we go into Thursday, we're getting into the ECB rate decision, but we also get GDP out of the US and initial jobless claims, and then we'll get the presser from Christine Lagarde at quarter two GMT, and then pending home sales at 3 o'clock, which kind of will just be not so interesting in the wash of FOMC the night before, and then US GDP coming. So, really a case of taking it easy. I think trading tomorrow, Wednesday, up until the European session, I think should be kind of avoided. Personally speaking, I'm going to avoid it. And then Thursday, same again. I think might be, unless you're getting decent trades on the opening bell on DAX or Bund, and then clearing that down before we get the interest rate decision there. I think that'll be the best approach. And then Friday, German GDP and the all-important core PCE price index out of the US, which is the Fed's preferred, data point to look at to see where they're at and how they're doing. Core PCE price index, they're coming in at 4.2. Is this where they want us to go down to 2%, or is it on CPIs? We're getting there on CPIs, 3% on the last reading, a miss on 3.1 and well below the prior 4%. Or do they want core PC to come down to 2, which I don't think it'll be core. Anyway, so that's the calendar. But really, something that we also have to pay attention to, which is really going to move these markets as well this week, is the earnings picture. So, look, today we have aftermarket, right? We have Alphabet coming in and Microsoft. Alaskan Air, not such a big one, but not such a big one there, really, but pretty well big enough. But either way, Microsoft and Google, the big ones. So you want to be paying attention to your Nasdaq trading at that point. And then if we kind of go on to Wednesday here, then we see Meta coming out with earnings and Coca-Cola. Meta after the market closed, Coke pre-market. Boeing as well coming in there in the morning time, so that will be kind of moving the Dow around quite a bit. It is a large constituent there. What else? Nothing too interesting on Wednesday, but Thursday then in the wash of the FOMC, you're going to get, McDonald's, MasterCard, AbbVie, Comcast, Intel, so quite a bit of tech stuff to happen there on Thursday. And then Friday, closing off the week, we've got the oilies on Exxon Mobil announcing pre-market So this is going to be for sure. It's going to be on all these big caps. It's going to be sectorial drag, right? So thinking about the pairs trading and stuff that goes on, and really, that's going to be the height, I think, of this sort of earnings bout. For me, anyway, looking through to next week. Next week, August 1st. Time is flying here. Wow. Nothing crazy coming through. So, on to a little bit of news. I'm really kind of looking here. Bloomberg, this is one of the top articles read on Bloomberg at the moment. The bear market has nearly been erased fewer than 20 months after it began. So, just really speaking around the bid that we've seen in the S&P here, from the highs of DEC 21 to the kind of depths of October it was actually last year, before, kind of it, I think, if I recall, that was the actually it was pre-banking crisis. I think the banking crisis, I think that was in this little blip down here. So the banking crisis didn't really do much, but nonetheless, you can see that we are climbing our way out of the hole here on equities. And you know what? I think we can go to all-time highs. If I switch over to my charts here and we look at the S&P on the dailies here in the middle, you'll see that really, we've had this downtrend in effect there from the, Jan 20, was this Jan 22 I have here? On the all-time high, it was this December 21. It was actually the 4th of Jan 2022. This downtrend that really the whole world is able to see. And there was a huge amount of attention on this, as you can imagine, when we came to test here on December last year, right? And then we essentially started breaking out there in February of this year to the upside, but then it was two-way action either side of the trend. So very hard to kind of get your trade on in around here. But then once we kind of pull back to these lower levels in around the 38s, it's just been, and March of this year, it's just been fantastic to the upside. I think this was, the banking crisis here on that pullback. So where do we go from here? Well, up, and up. I think, with the CPIs coming through as tame as they have on the last couple of readings, the Fed policy and the Fed tightening cycle is working. Jerome is getting ready to do a victory lap should we have another soft PCE and another soft CPI come through. Targets on the upside here, very much 46.12 halves on the, what are we trading, September contracts at the U23. And I think there may be a small amount of selling done here once we get to the 46.12s. But a key element I use in my trading is the sharking kind of concept, in that if we kind of come up really close to a key level and we just don't then trade it to the tick, like if we shark the level, if we kind of swim around it by a very small amount of ticks, like 10, 20, even 10 points, which it kind of 3 points in this case, actually, about 2 points in this case. Well, that to me says that the market is then just going to take a pullback, and no trade on the short here. It's a pullback to then pick up buyers and then come up again. And when we come up again, it does wipe out that level. Now, these are daily bars, so do keep in mind that while the daily bar may come up here and have a close below, I think we will flush the level to the upside and potentially close below. But either which way, do be mindful of the 46.12 halves. What is that level? Well, it's actually this low on the left of the screen here, which was the 1st of December 2021, right? Just keep an eye on that level. We were talking yesterday, these things are kind of too high to buy, but intraday, we're not really holding these things for multi-days at levels like this. Really just in and out, very, very small sort of tick targets for us, and we just modulate our size as to how much we want to wallop some of these areas. But just keep in mind there. I think it pays dividends if we go out to monthly bars on these equities, and then kind of we can hide some of these drawings and then normalize the chart. And this is monthly bars on the SPOOs, and really like the 46.45s to me looks like a better level here. 46.45s, if I zoom in on that, it's just kind of the high of October or um, August, sorry, 2021. That looks like a better area for us to test to the upside here. So if I just kind of take these drawings off, you can see I have it marked up there, 46, 47s for a test, which would be quite interesting. But we're really not that far off of the all-time highs here. Like chart calculator on, we're just shy of 7% off of the all-time highs in SPOOs. And you know what? Because of the weakening CPI picture, I think we can do it. I think the market wants to price in that inflation is fully dead, that Jerome has got, a bit right between the inflation's teeth, and it's pulling back. He's pulling back on those reins, and he's getting the job done. So I think that's what the market's pricing in. Who knows? But either which way, you do not really want to be seller on these prices. And I was talking to Jason Shapiro there, I think late last week. I think it was on Friday actually, and he was just saying he doesn't think that these markets are anywhere near the high in this run, and I would totally agree with that as well. But he is the Jedi. Looking at the Nasdaq as well. We'll get onto oil in a second here, but looking at the Nasdaq, we have this trend in effect. Like, look at how perfect this is. We were looking at this trend yesterday, and bam, it came in. So this is the low here of the 7th of June to the low we got on the 26th of June, and then bang, you got your levels here. We weren't actually trading it on these levels, but important to see that we got closes. You could say we got the close on both days here, pretty much above the trend. Yesterday, snuck below the trend a little bit, and then we're on the way up today. And I think this is easy going to be 15,788 again, and easy this is going to be 16,232 over the next probably 7 trading sessions. So just keep that in mind. Now, I mean, look, how do you trade? How do you get on that long there yesterday? And this is really just a look. We look at it. It's not a lesson, but looking at the Nasdaq there yesterday, there was a trade for us that we got into initially, and it just then wiped out, right? And so this is kind of what you get on these sort of FOMC look ahead weeks. So yeah, there was initially quite a lot of volatility here over the open, and just like putting in the range, just in anticipation basically of the FOMC GDP and PCE price index to come, and all of these earnings. So very difficult trading there yesterday. But nonetheless, I think we're going way up on these markets. So back to the dailies. What else? Yeah, if we kind of go back to looking at the oil picture here, a couple of articles just really talking more and more about how tight the oil picture is right now. Yet the market, up until kind of last week, the market just has really had a hell of a time trying to price in how tight the global picture is getting in certain ways. And you're seeing the US shale slowdown here now coming in, and this is really an after effect of the essentially, let's use oil going to zero April 2020 as a marker, and from that point onward, oil companies really adopted this more investor first focus, where they were looking to, instead of their focus being on expansion, more drilling, opening up more areas, and basically a lot of capital expenditure programs, right? Instead of that, they've now kind of pivoted as a core policy to return capital to investors through dividends, through all sorts of ways, through the share price, and to develop a stronger book, essentially, right? And a stronger book value of the company, to have some good cash reserves, to not have everything always reinvested on more expansion, more holes, more drilling. There's just more focus now for the investors to get capital returned. And with that, all right, you're then seeing less investment essentially coming through into the Marcellus Shale and West Texas, basically West Texas shale drilling, right? Um, and so therefore you are then going to get a bite of supply, a tightening of supply in North America of a certain amount, a more cautious than expansion of drilling areas. And Biden's energy team and Biden himself have not been a friend to the expansion of the oil industry in North America since he's gotten in. That is softening a certain amount. But the point I'm trying to get to here is the tightness in the market in the US does make sense, and it is happening. And these oil companies are very much tucking in their wings, focusing on returning capital to the investors, focused on improving their share prices. Um, and with that, we're going to have a tighter oil picture. Okay, and you got the Saudis and OPEC Plus cutting 1 million, then another 1 million. There's actually 2.6 is the actual effective total cuts so far. There's another meeting coming in August. It's all there, like, for the tightness of supply. Russians, however, the IEA really got it wrong when they were saying that the Russians were going to essentially be severely curtailed on their oil production. They got that really wrong. Russia didn't really have any sort of a blip on its production levels, and they've been shipping it out and selling it to China and India. And so therefore, that's what I think has suppressed the oil price from going for it and getting back to like 100 on Brent or WTI, right? So if we kind of go over onto the oil chart and have a look here, you'll see this is the price of oil here on daily bars. If we kind of zoom out here, the pink line is the spike to the high that we got on the Russian invasion of Ukraine, sitting currently on the U23 contract at 90 spot 84s. Some key levels I've been looking at to trade here. Now, the one thing about this chart is I have not changed anything here apart from the pink lines since I did the weekly look ahead last week. I said a level to look out for 73.28. Should we get it? Very cheap, buy it. I said 74.03s is probably going to be the disco area to get involved. And you see this arrow up pointing to the 70.85s where we should be going to. We're there. It happened. All right. 1, 2, 3, 4, 5 days. Bang. Done. All right. So, we're not selling snake oil here at all. In Discord, we are identifying the right areas to trade these markets. This is not a one-off. We're doing this almost every day, identifying levels like this. If you want to know how to do it, please do get in touch. Just go to duggancapital.com or give me an email, tim@duggancapital.com. Anyway, point being is we've had this push up right now from 74.03s. We're now trading 78, spot 78s. Time for a little bit of a pullback, I think. But ultimately, I think we're in a great area here to just then keep going up. Ultimately, a pullback. I don't even think we'll get a pullback to 76.42s. I think 77.25s. Either side of here might be a bit messy, but either which way, I'm probably going to take it easy. Yesterday I actually made money shorting oil, a very small little trade, but it just wasn't really setting up for me at the time. And then for the longs, I was distracted, didn't come in and get the long. A couple of guys in the room did get the longs here and did very well out of this, so well done to them. Anyway, now I'm a buyer on a pullback for sure. So, and this pullback could be 1 or 2 days. Looking over onto the daily bars here, or sorry, the 30-minute bars on oil. Yeah, so some of the detail here, right, is that we pushed, importantly, yesterday, the reversal down. So I actually sold at this high here. I'll just zoom in a bit. Basically sold here. Didn't want to, anyway. Sold here and back down to VWAP, and then got distracted by something and wasn't the buyer on the 200 daily EMA, which I'm superimposing onto here, which is not really confident with VWAP at the time, but nonetheless, bang, to the upside we go. Really nice trade there. Well done to Lewis. And so, look, here we are this morning. We're under the cosh a bit. I think the pullback will be in effect, and I think we'll probably, I don't know how deep we could go here. Maybe the 200 again. Maybe the 200, 76.95s would be very nice to then get the bounce there from there and then push up to the 80.50s. But we'll see. We'll see. We're not going to go rushing at these markets just because we think we see something, right? So, but look, I think we're under a pullback here for maybe just today on oil. And yeah, just act accordingly. What else did I want to cover on the macro articles? Yeah, the SPR. Look, much talked about the SPR. It's as low as it's been since 1983. I think currently it's about 320 million barrels are in storage. I'll post all the links to these articles on the YouTube. But more sort of bullishness. I don't think you're ever going to make money going long or indeed short oil just because the SPR is low. The reserves in the US are low, right? I like this article because it's kind of talking about how that's just not a trade, right? There's things that are trades and there's things that are just discussions. And while they're interesting discussions, you just got to say to yourself, what's the trade? And as a former head of trading said to me in my early days of trading prop, he's like, listen, that's all well and good, but what's the trade? If you can't tell me what the trade is in the next 5 minutes, there is no trade, and let's move on. And he's dead right. There's all these conversations about, well, what if this, what if that, what if the Fed pause, what if the Fed hike? But great, well, what is the trade? If you can't tell me what the trade is exactly in the next 5 minutes, there's no trade right now. Okay. So, I think it's important to read this article and be aware of it. But, I think there's a lot of people who may be getting long oil because the SPR is empty. I would say that those people are all stopped out. I don't think they would have been able to hold this idea of, this has been pervasive as an idea for the last 6 months. Oil has not been going up for 6 months. So my point is that this is a good article to read. It's important to know that the US started their buying to replenish and said they would start replenishing the SPR in August or between the price of 64. I think it's about 64 and $74. Okay, so we're coming into August now. We're seeing buying on the tape in oil. And we've been coming out of a low of $67. Okay, so I think their average buying price is set to be around $70. Okay, so just to be aware of that, because there will be a lot of chatter about that as we go on. I'm just going to update this oil chart now, but yeah, I think there'll be a lot of chatter about this. But is it tradable information? Probably not, but it's good to know that the US are going to be rebuying oil at those prices. All right, so really kind of, that's oil. I think I've lifted that 74.03s up to 74.67s now to kind of take into account these lows here. I think if we revisit that low, I think we're in trouble. But what else can we look at? Nat gas. Some of you may be following my chats with Jason where I've been long nat gas for a couple of months now, and so we're generally doing good here. I think we've seen a really nice show of strength coming in around the 527s, which was actually I thought we'd give that up and we pull back to 369s area, 371s area to then keep going up. But you are about to observe, I think, a push to these higher levels here. You've seen this trend breaking to the upside, the pullback. See, the pullback could be as deep as 369s. However, we are kind of seeing now more breaking to the upside, further breaking to the upside, and I think the next level up is 2.776 and higher than 2.888s. And I'm buyer of pullbacks here. I mean, I think the general consensus is that we are going to stay oversupplied in that gas for the next 6 months. well into 2024. But you know what? I'm just not seeing that on the tape. And with Europe putting a call on the US for gas supplies, and more shipments set to go out to Europe and into degasification plants in Spain and all over Europe. I think I think the glut of oversupply in North America can be drawn down over the next 6 months. So I'm kind of playing that in a couple of different ways, that trade. Gold, everyone loves a bit of gold. I tell you what, it does not love them. It's been a very tricky trade, gold. Really tricky. I'm just going to go out to monthly bars so we have a look at this and then get these drawings off and normalize the chart here a little bit. So yeah, I mean, essentially it's like this is going back to 2018 on the hard left of the screen. I don't need to load much more information here, but essentially this is kind of a difficult sort of a market to trade, albeit we've had 2 months of pulling back. Now we're trying to bid again. I think people are sort of hedging the longs in equities somewhat with longs in gold. It's a hard trade. Look, I've had some really nice intraday trades lately with gold. I'm not swinging this because I think it's just an incredibly difficult trade. I think the best trade you would have gotten is like this pullback in March 2020. And even at that, you would have been called into question if you were still swinging that 2 years later, which I don't think you would have been. But nonetheless, this is not the prettiest chart to trade. I think we're sideways consolidating. If you ask me, I think we are going to go to probably 2.5 over the next 12 months. But it's just a case of timing that trade, getting in at the right area, and just we're just not getting the opportunities to do that at the moment, right? So, I think there's certain headwinds there for gold at the moment. Where else can we look to see anything interesting going on? Bitcoin. Let's just check in on Bitcoin here. As I said, again, I haven't changed this chart since last week. I said we'd be pulling back to test 28 157s and the 27 650s to then get that support to drive to what will be 42s. And I mean, that plan is currently coming in. It's not ready to come out of the oven just yet. We need to get these levels to trade first. We see the rejection here. Once we dropped out, even here, tried to get back in here and just got walloped down, right? And then tried to get back in here, and then just got walloped down to what was like 24 792s. But either which way, so what you're going to be looking for is an inverse of this, right? It's going to come back here. It's probably going to spike into the 27 650s anywhere, or I'd be a buyer anywhere here to then play that to 42s. And so you're pretty much looking at that's a pretty big trade, actually. If we get the chart calc on, that's going to be 52% of a move from hither to thither. So keep your eye out on that one. And that's it. That's it, really. I mean, the dollar, I don't think I need to notify anyone that the dollar is getting stronger. Hatam was kind of talking about the resurgence of the dollar having an effect on oil prices, but we talked about that, and I said that, that's such a move that I think the correlation will break in order for dollar to get back up and oil to keep moving back up. But you're seeing the correlation is going to break down on dollar to gold and dollar to oil as of late, because essentially they have their own set of buyers and they're kind of seems to be ignoring this resurging in the dollar. But ultimately we are down in the dollar. We've only retraced 50%. So gold and oil are pricing in that cheaper dollar right now. So this resurgence, while it looks impressive, it's actually, I think, going to get sold at 101.60s. And then I think it's going to keep going down, potentially, if equities are going to keep going up. All right, that is it for me for another look ahead for the week. Guys, stay lucky. Big week to come ahead, as I've been saying. Really FOMC Wednesday, GDP US on Thursday, with ECB decision on the rate. It's probably going to be a 25 hike, and then German GDP and US core PCs on Friday. Lots there, and fortune favors not only the brave but the patient. All right, stay lucky. Have a great week. Talk to you later. Bye.